Your student loan debt nightmare? It's finally over for millions of you. The government just announced a massive U-turn, restarting student loan forgiveness after months of chaos. This is big, and the clock is ticking fast on a huge tax advantage you need to grab right now. The Department of Education was forced to pivot after a huge teachers union, the American Federation of Teachers, filed a massive lawsuit. They accused the administration of blocking relief that Congress mandated. Now, the legal fight is settled. The government has agreed to start canceling loans again. If you are one of the over 2.5 million people enrolled in two key repayment programs, Income-Contingent Repayment or Pay-as-you-earn, listen up. Your loans are about to be processed for cancellation. The Income-Based Repayment Plan, which was the only option left for cancellation recently, is also fully back in action. We are talking about decades of payments wiped clean if you hit the 20 or 25-year mark on your income-driven plan. This relief is long overdue for people who've been paying faithfully for years. Here is the most critical part: the hidden danger that was about to blow up your finances, the tax bomb. The government just made a monumental promise. If you qualify for forgiveness this year, 2025, you are protected from federal taxes on the canceled amount. Zero federal income tax. This is a huge, tremendous win for millions. Without this protection, you would have gotten slammed with a giant tax bill in 2026, treating your forgiven loan balance as regular income. That tax bill could run into the thousands of dollars. The reason this protection exists is simple. There was a law that temporarily made canceled student debt tax-free at the federal level, but that law expires at the end of this year, December 31st, 2025. Bureaucracy moves slow, right? If your loan was supposed to be canceled this year, but the government delayed the paperwork until 2026, you would have been penalized with that unexpected tax bill. This deal fixes that. It guarantees that if you become eligible this year, even if the processing delay drags into next year, the government recognizes your 2025 date. That locks in your tax-free status. But you must understand the deadline. That federal tax shield is set to disappear after December 31st. If you qualify for forgiveness after the end of this year, you could be hit with that massive tax penalty when you file your 2026 taxes. You need to verify your eligibility now to make sure you land in the 2025 safe zone. Why did this mess happen in the first place? Earlier this year, the administration paused processing for these income-driven repayment programs. They claimed they had to do this because of court orders tied to the new SAVE plan. They argued they needed to separate the previous administration's illegal cancellation programs from the legitimate ones mandated by Congress. That bureaucratic excuse left millions hanging, uncertain if they would ever get the relief they earned. Now, thanks to this legal settlement, the processing for IBR, ICR, and PAYE is back on track. The agreement requires the Department of Education to actively restart these discharges for anyone who meets the payment thresholds. We also have good news for public servants. The Public Service Loan Forgiveness Program, PSLF, is part of this deal. If you are a teacher, a government employee, or work for a nonprofit, PSLF is generally tax-free relief anyway. But the government also committed to continuing the PSLF buyback process. This is huge. The buyback process allows you to make a payment to cover old periods of deferment or forbearance that never counted toward your 120 required PSLF payments before. If you're a public servant, taking advantage of buyback could push you immediately over the finish line for total debt cancellation. You need to apply for that option ASAP if you have any gap payments. This agreement also helps borrowers seeking IDR and PSLF buybacks who don't meet the partial financial hardship requirement anymore. That hardship rule was eliminated by the One Big Beautiful Bill Act, and the government will process those applications now too. Now let's talk about the big catch, the infamous SAVE plan. The Saving on a Valuable Education Plan, which was huge under the previous administration, is still completely blocked by a separate court injunction. About 8 million borrowers are enrolled in SAVE. They're essentially stuck in financial limbo right now because payments made while in forbearance do not count toward eventual forgiveness. If you are a SAVE borrower and you want to keep making progress toward debt relief, or if you're close to hitting your forgiveness deadline, you need to switch plans immediately. You must move to IBR, ICR, or PAYE to start making payments that count again toward your forgiveness clock. Do not wait for SAVE to unblock itself. That might take months or years of court battles. Another wrinkle is the future of ICR and PAYE. Remember that One Big Beautiful Bill Act? It's phasing out both the ICR and PAYE plans by July 2028. They are going away for good. This means you have a limited window to secure forgiveness through these programs before they're completely gone. The only income-driven repayment plan that is definitely sticking around and being expanded is IBR, Income-Based Repayment. The economic impact here is impossible to ignore. Americans are drowning in roughly $1.8 trillion in student debt. Think about that burden. Borrowers aged 18 to 39 spend over 20% of their monthly income just on payments. They struggle to save long-term or afford basic expenses. Freeing up this money means more spending in the economy. Experts estimate that clearing this debt could boost the gross domestic product by up to $108 billion over the next 10 years. It could also spark a boom in new businesses. When people aren't trapped by debt, they can actually invest in startups and innovation that benefits all of us. For borrowers who've been waiting years, some for 2 decades or more, this agreement is forcing the Department of Education to finally catch up on a serious processing backlog. The best part, this entire process is now under court supervision. The Department of Education has to file 6 monthly status reports to the court. They have to show proof they are actually processing applications, clearing the backlog, and providing the relief. That added court oversight ensures accountability and forces the government to follow through on its commitments. If you think you are eligible for ICR, PAYE, or IBR forgiveness right now because you hit the 20 or 25-year mark, you need to check your status and act. If you kept making payments even after you officially qualified for forgiveness, the government is agreeing to give you a refund for those extra payments. That is cash back in your pocket. How do you check your status? Simple. Go to the official federal student loan website, log into your account, and check your loan breakdown. Look at which repayment plan you're in. If you are a public service worker, verify your employment history immediately. Submit or resubmit those employer certification forms to lock in those qualifying months for PSLF. Relief is closer than it has been in months. It's mandated relief, protected from taxes for now, and finally moving forward under a court's watchful eye. But remember, the tax clock is ticking down to January 1st, 2026. Don't wait until the last second. Confirm your eligibility, verify your payment history, and make sure your paperwork is submitted this year. This is your chance for debt freedom. Hit that like button if you learned something today, subscribe so you don't miss the next financial update, and ring the bell to get notifications right away. I'll catch you next time.